Hey everybody, Javier Novoa here with the Libertarian Investor, and this is the Insomnia Podcast. And I call it that because we put it out at probably about 1 or 2 a.m. in the morning. I'm going to try to do it again at least once a week, if not 2 or 3 times a week, where we talk about news in the markets. It's going to be mainly geared towards investing, but we're going to be talking about all of our favorite topics like liberty, investing, of course, included in that, politics, anything that can help us make money. And so it's best viewed probably with your favorite beverage, maybe coffee or water, or maybe this week with some alcohol, because a lot of crazy things happened on the markets this week. And of course, with this Trump administration, there is never a dull moment, and people who try to predict things are going to be given a run for their money. We are, of course, going to try to predict on this show in order to try to make money. But as the Austrian economists have taught us, no predictions can be 100% correct, because we knew the future, no action would be possible. And we, of course, do not know all of the factors that go into a certain event or a certain phenomenon. We could never know it. But we still, as acting beings, implied in the very proposition that we act is that we have to act according to a plan. So we have to try to plan and try to predict. That's what we'll try to do on this show. And of course, I welcome your comments. I welcome your discussions. Our TikTok channel's been taking off, and you can find me on TikTok as well as the Libertarian Investor. But for long form content, I'd invite you to come on this channel. And if you like our material, I do invite you to please hit the like button, subscribe, and like. And we're going to make a video soon. It's going to be a parody, but it's going to be why you should not subscribe to this channel. And you'll see it and tell me what you think. But I want people to subscribe because I know this information can benefit people. And I know we can benefit and grow together. But also, I don't want too many people to subscribe, because I'm going to be putting out real-time investment ideas on this channel, and we can't have too many people executing on those ideas. So I'm kind of conflicted as to whether I should ask for subscribers. But if you like this material, still early stage in the channel, please do subscribe, hit the like button, hit the bell button. So I want to talk about this issue of the new labor bill in Argentina. And we've talked about Javier Milei a lot on this channel, and I like Javier Milei because he's an anarcho-capitalist. He purports to be the same political ideology that I have. Although we don't agree with everything, we can talk about that as well, but 95% of his actions, I believe, are good. And the best action a government can take is deprive itself of powers, because the less power the government has, the more power the private sector has. And I was watching Kyle Kulinski of Secular Talk, and I watch all of the liberal talk shows. I watch Secular Talk, I watch the Young Turks, and again, I like watching all sides of the debate because I have to rationally allocate my capital. In order to do that, I need to know what people are thinking and what they're feeling, if nothing else, than to have a good intuition of what the market might do, because the market's made up of people. But he was talking about the horrific labor bill. And admittedly, the labor bill in Argentina, and we'll talk about it in a minute, it includes things like companies can force workers to work 12-hour shifts a day as opposed to the 8-hour shifts a day. They can force their workers to take vacation time in installments. And they can pay in kind, which means instead of paying in money, they can pay their workers in food. And Kyle Kulinski was talking about how this was horrifying. And for me, it's horrific. I have to tell you that as a young teenager, I was a socialist. I came to libertarian economics in my early 20s when I read the great Austrian economists. First, I started reading mainstream economists. Then I graduated to the Austrian economists, and I realized that free market economics is to the best benefit of everybody. I've always been concerned about the benefit of people, the benefit of the masses, and I still have that concern. As Winston Churchill said, if you're young and you're not a socialist, you don't have a heart. But if you're old and you're a socialist, you don't have a brain. And so many people graduated from socialism to Austrian economics to free market economics. And it is free market economics which actually delivers the most people out of poverty and gives them opportunities. Of course, Kulinski was saying that we're retrogressing into the very situations that our forebears fought so hard against and were able to secure victories like the 8-hour workday and so on and so forth. But again, it's very hard for me because I am pro-worker. I don't like businesses that mistreat their workers. I think they're stupid. I think that they're counterproductive. But I know that the free market will punish businesses that are unkind to their workers. I think that in a free society, in a libertarian society, businesses will be the main generators of welfare. They'll be able to take care of their workers. They'll be able to give them health care. They'll be able to help them in their living arrangements and so on. And they will generate, of course, lower prices for all goods so that more people can procure basic goods. And if you want a case study of that, just look at the United States. Now, the United States has had many problems, but we are more free market than many other nations on earth. And the countries that are closest to free market, which ironically have been closest to the Enlightenment British philosophers and economists, so Britain, the United States, Australia, Canada, these countries have seen the most increases in lifestyle quality for the majority of their citizens. But what leftists or modern day leftists like Kulinski want to argue to us is that it was government regulation and governments passing laws that increased the quality of life of workers over the last 2 centuries. And it was not that. In fact, the quality of lives of the workers increased before the legislation came to play, and then the legislation happened after that. And you can look in history. During the Industrial Revolution, when many people moved from farms to cities, the quality of life of these workers was horrible. But one must ask, why did they come to the cities if the quality of life was horrible? Because the quality of life that they could procure from working in factories, these long hours in the cities, to them seemed like a better quality of life than they could procure in subsistence farming or staying on their land and so on and not moving to the cities. And it is the same in Argentina. Now, Argentina is passing this law that says, again, companies can force their workers to work 12 hours a day. Companies can pay their workers in kind, which means instead of paying much of their wages in money, they can pay them in food. But the issue that Kyle Kulinski and others are not looking at is that why would anyone go and work for companies in these conditions? And indeed, there's nothing in the bill that says people are forced to go work for these companies. There's nothing in the bill that said companies must force workers to work 12 hours a day, or they must pay them in kind. They're just saying that companies may do that. They're giving them the freedom to do that. And of course, in a perfectly libertarian society, you're free to conduct relations with others on your property. As long as there's no force involved for them to be there, you're free to conduct those relations as you see fit. So the question is, if working 12 hours is so horrific, why would anyone go and work for these companies? And of course the answer is, and it's sad for me, because I want people to have good quality of life, is that they need to work these jobs because otherwise they cannot procure the means of survival. And we have to ask not why this archaic law is coming into being now that seems so cruel. We have to ask what led to this. Because as societies develop their capital base, and as societies increase the means of production so that they can increase goods and services, so that they become cheaper, so the majority of people can afford them, they have to have developed a capital base. So what happened to Argentina's capital base? Because remember, 200 years ago, 100 years ago, Argentina was the most wealthy country in the Western Hemisphere. They had already developed a capital base. They had attracted manifold investment. They had great standards of living. In fact, people would say as rich as an Argentine. What happened? And I argue to you what happened was the interventionist policies and socialism that started with Perón and continue today with the Kirchners and the socialist government, which has wreaked havoc upon Argentina with strangling regulations for businesses that made it more expensive for them to operate in Argentina. So what happened? If it's more expensive for businesses to operate in Argentina, those businesses will go away. Those investments will go elsewhere, which will lead to an erosion in the capital base. And by capital, I mean production goods, goods that can be used to produce things that people want to buy, things that people need. They left that country. Therefore, procuring a livelihood became more expensive. And so 2 years ago, not only could you not go and work 12 hours a day at a company, you couldn't work any hours a day because there were no jobs. People who were graduating from universities with PhDs were not even able to find jobs in Argentina, and that is due to socialism. That's due to an erosion in the capital base. So what does Javier Milei know? He knows that in order for Argentina to come out of this economic crisis, he has to unleash the forces of the free market. So people will be able to contract with companies. Because listen to this. If someone now, before this law passed in Argentina, wanted to go work for a company, they could not, because the company would say, I cannot pay you the wages you want. What I can do is I can pay 2/3 of your wages in money and then 1/3 in food. And you know what? Many people who did not have food would accept that arrangement. But under the previous laws of Argentina, people could not accept that arrangement. So therefore, people would just have to go without food. Now people are going to be able to procure at least some food when they go to work in Argentina. So what Javier Milei is trying to do is lessen the regulations and burdens on corporations. And what will happen very quickly is more capital investment will flood into Argentina. More people will want to go do business in Argentina. And then the goods, the consumers' goods and products and food and goods necessary for a good life will come into Argentina a lot easier. And then the quality of life of people will rise. Like in the United States, there are some people that do work 12 hours a day. Nobody's forced to. But even the homeless people here in the United States have some of the basic necessities. In Argentina, it is dismal. These laws, as mean as they seem, and as counterintuitive as it seems, this is going to help rebuild the capital base in Argentina. And again, you just need an understanding, a basic understanding of free market economics to understand this. So gold went back up above 5,000. In fact, right now as we speak, it's Saturday morning, gold is $5,105.90 an ounce. And I said that 5,000 is probably going to be the support, and gold is going to slowly and gradually go up. Now, this first straight line up that we saw over the last few months, that was precipitous, and I knew that the height of those prices could not be sustained, but you're still way up on gold, way up than you were a year ago, and in a year it's going to go way up. And this ties in with all of the craziness that's happening with the Trump administration. There are a few pieces of good news that we're going to get to in the Trump administration. Silver is back up to $84.52. And oil, ladies and gentlemen, this week was a great week for oil. It's down today 0.14%, but it was up 5.93% this week to 66.31. And I think that's mainly because of the bellicose pronouncements coming out of the news. Again, with Trump, we don't know what he's going to do until the last minute. There is a vast armada building outside of Iran, and sometimes we hear that he's in talks. Sometimes we hear that we might attack Iran. I'm not going to make a prediction on that. I did make a prediction about a month ago that was not going to happen. I do not know now because there are so many forces amassing near Iran. It would be a catastrophic mistake for the United States. It would unfortunately be a catastrophic mistake for the world and for world stability, for world peace, if this went forward. So we pray that this doesn't go forward, but it may indeed happen. But the uncertainty is very good for oil prices. I just wanted to point one thing out. Last year, I talked a lot about Occidental Petroleum. I think it is a good play for oil prices, and I think that with the uncertainty in the world, oil prices may be going up. And by the way, that's bad news for the Republicans. If oil prices and gas prices go up before November, before the midterms, you can kiss the Senate and the House of Representatives goodbye, because Trump ran to a large extent on lower gas prices. What he's going to see is that he can't control gas prices, and the more bellicose he becomes to the world, unfortunately, the higher gas prices go. It may make us rich, because Occidental Petroleum is up to 51.84. That is 19.15% this month, after being flat for a long, long time. Over 6 months, it's up 17%. And over 1 year, we're up 2%. So this year, Oxy, I think, is a good play on oil. We're going to continue to keep our eyes on that unfolding situation. From Zero Hedge reporting on today's stock market, U.S. stocks were lower, as were the majority of sectors, with financials in the laggard and not helped after it was reported that Blue Owl halted redemptions at its private credit fund. There's a lot going on in the world of credit and bonds, and interest rates should be a lot higher than they are. There's not trust in the system. And what we're seeing is that many companies that deal with credit, many governments that deal with credit, are losing trust in the system. Who would trust a system that says openly that if the debt gets too much out of control, they will print money to pay it? And that ties in with a loss in trust in the dollar. And just this week, guys, it was reported that China is selling more U.S. bonds. And of course, China's been doing this for years. But what is the big picture here? The big picture is that China is long-term looking to ditch the dollar, as are many countries. Many countries no longer depend on our promises of redemption of bonds. And it's very simple if you map it out this way. Here's what's been happening since Bretton Woods. The U.S. buys goods from countries like China now, China and Japan. By the way, Japan is selling a lot of our bonds as well. They would buy those goods and we'd run up a huge trade deficit, which means we're importing more than we're exporting. So we're not producing as much as we're importing. That would be fine if later we produce those goods so that we could sell them back to the Chinese. But what ends up happening is the Chinese have our dollars, right? But instead of spending those dollars on more goods from the United States, what they do is they spent those dollars to buy our treasury bonds. And that in turn financed the United States government. What it also did was help prop up the dollar, because that money is now tied up in bonds. But what's going to happen now when China sells the bonds? Okay, China sells the bonds. Now they have all these dollars. Now, it would be one thing if the Chinese took those dollars and bought a bunch of American products. But we don't produce much anyway. They're not going to do that. What they've been doing, what they're showing that they're going to do, is they're taking those dollars and they're buying gold, they're buying goods from other countries, they're buying euros, they're buying currencies from other countries. And when that happens, that is further, because it puts more dollars out there, there's now less demand for dollars, there are more dollars out there. What happens? That devalues our currency. Either way, we lose. So the general point is, when other countries lose confidence in our credit instruments, whether it's bonds or other paper, the dollar loses. The dollar goes down. And we see this in private companies as well. Google just introduced a 100-year bond. What does that mean? They're going to pay you interest when you buy that bond, and then they're going to pay you back in 100 years? How many companies last 100 years? If you look at the Dow Jones, you'll see I think it's only 2 companies, and they haven't even lasted in their current form. So the debt game is a big game, and it's unraveling before our very eyes, guys. So the dollar is going to collapse, and we need to start seeking more investments outside the dollar in order to actually get rich no matter what happens. Another ominous event that I haven't seen many people talking about is the fact that the Netherlands just passed an unrealized capital gains tax. What that means is that if you're holding stock for over a year and that stock increases, but you don't sell it, you have to pay taxes on that increase. Now, all capital gains tax is bad, but at least under the current system in Europe and the United States, you only pay that 20-30% capital gains tax when you sell the stock. This tax, I believe, from the Dutch Parliament is a 36% tax on unrealized gains. What's that going to do? That's going to discourage long-term holdings of stocks, which, by the way, indirectly could be good because you could see the prices go down. But it is a threat to private property. It is a threat to people making rational investments. And eventually it's going to be a threat to companies being able to raise money, because a lot of the secondary offerings that companies make are going to be according to their stock price. And if fewer people are holding their stock prices, they will go down. I'm not saying they don't need to go down, but it shouldn't be because of government fiat. And this happened in the Netherlands, guys, but mark my words, it's going to be happening in more Western countries. And when the socialists win here, which they will do when Trump fabulously ruins the economy, they will also try to pass an unrealized capital gains tax. And we have to see what strategic measures we're going to take as investors when that happens. But it is indeed a worrying development, and I hope more people start talking about it. In some good news, guys, the Supreme Court struck down Trump's tariffs, and I hope that we will be able to soon see the end of these proposals, because Trump's saying now that they're going to try to get around that. They're going to try to do it another way. But guys, we're already seeing inflationary pressures due to these tariffs. We're seeing consumers pay more. In December, it was said that this was the first time that consumers spent $1 trillion on Christmas, but they were buying the same amount, if not a smaller amount, of goods. So we've already seen this inflationary pressure. The New York Fed just did a study, which I think the Trump administration is now criticizing, but they said that 90% of the tariffs are being fronted, are being paid by the consumers. Of course, guys, if you know Austrian economics, we don't even need a study, because David Ricardo 200 years ago proved that tariffs are detrimental to the consumer. Let's say the United States levies a 20% tariff on goods coming from China. Well, either China's going to have to charge the consumer that price, or they're going to have to pay that price. But if they can find consumers in other countries where they don't have to pay that price, they'll go to the other country. So now producers in our country, why would they not charge that price if they can? They're not going to charge 20% lower, because in a competitive free market, you want to charge the highest price you can to get the highest profit you can. So obviously, they're going to charge that money. So at the end of the day, the American consumer is going to be paying that 20% more on average. Now, over the last few months, I think many companies have kept their prices stable in order to gain market share. But now, almost all companies, I don't think it's 90%, I think it's 100%, are going to be charging those full tariff prices. So I hope that with this Supreme Court ruling, and we'll have to see more of what's happening, but I hope that this is the end of this tariff fiasco, because a tariff is a tax on us all. And I would be amiss if I missed this opportunity, because you see, we bash Trump and the administration a lot on this channel as libertarians, but when he does something good, we're going to praise him. And this new development with the FDA, they're only now requiring the FDA to test a product once rather than twice. Now, I wish they'd abolish the FDA. And many people would be surprised due to my opinions on RFK. I admire his positions. I admire what they're doing. And I think that a lot of again, this is not medical advice, but I think a lot of these medical interventions are harmful. But at the same time, I support the right of anyone they want to take any medical treatment they want. And what the FDA was doing by forcing these double testing of medical products was making these goods and services more expensive on the market. So I praise Trump for getting it down to just one test. Before the 60s, you didn't even need FDA approval to put a drug on the market. And of course, if these corporations were not supported by the government, if they were purely free market, if they didn't have limited liability from lawsuits, it would be in their best interest to make products that would not kill people, would not harm people. It would be in their best interest to do good research. But it's not the role of the government to force companies to pay to do research. Indeed, there should be no law that they would have to do any research. Again, it should be the freedom of an individual and his or her doctor to decide what medication to take or what medication or intervention to not undergo. So I do praise the Trump administration for that. That's another good development that's happened over the last week. Now, what are some investment moves, guys? Because it's what this channel's about. What have I been looking at? And a few ideas. I have not come to that big trade yet this year. And again, I hope some of you let me know in the comments what you think. But my ideas are, of course, keep investing in silver and oil. Because I believe over the next year, 2 years, if this global instability continues, of course, it's just the common sense play that gold, silver, and oil will continue rising. I'm also looking at other commodities. I'm researching that. We'll talk about that on another show. Another thing that I'm looking at is royalty and streaming companies, guys. You get some hard asset exposure without a lot of risk. Because if you invest in gold miners, commodities producers, you get a lot of political risk, a lot of geopolitical risk. But what if you're looking at royalty and streaming companies? They just deal with the finance aspect of it. I've got a list of some of those companies I'm looking at. We'll present it in another video. Uranium and nuclear supply chain, again, Oklo, think things like this, because energy is still going to be the defining concept of the next 20, 30 years, I believe. And with AI, that's going to be all the more prevalent. So we're looking at several nuclear energy companies, uranium, things like this. Also insurance companies with short duration portfolios. We want companies that reinvest the premium into short duration, higher yield bonds, because the longer term bonds, as we know, people are already losing confidence in them. But it's going to be the shorter term bonds, I think, that are going to hold the most leverage. I'm also looking into the bond market. Again, we'll make videos on all of these moves. I hope you comment on that and help me to develop and formulate these ideas. I'm still hoping Bitcoin seeks lower. Just as a short-term trade, we may trade Bitcoin again when it hits 60 and sell it when it gets to 100,000. So guys, thanks for watching. That's the market wrap for this week. If you have any comments, please do comment on the show. And please do let me know what you think. If you like the channel, subscribe and like. And I will see you guys very soon this weekend. Have a great weekend.